All right, let's kick off. I was talking, Dr. Subramanian, and when I was introducing the panel, and of course building up to your introduction, about how varied the views have been both pre and post this budget. Economists have had extremely, different things to say, from the fact that it has been beneficial in terms of plugging leakages, to the fact that it hasn't been inclusive. Let me first ask you, because the devil's always in the fine print, how would you interpret the fine print of the budget this time around?
Firstly, thanks for having me. So I think one has to begin by commenting on something that's, I think, very important, which is that, beginning last year and certainly continuing this year, for me, one of the highlights of the budget, and I'm going to be critical in just a second, but I think it's worth emphasizing that, in terms of transparency and responsibility and integrity of the budgeting process, I think the last budget and this budget deserve a lot of praise. Now, I say this because, I've been fairly critical of what I call the software of policy making, the kinds of things that the government maybe has not done. And also the fact that in a number of areas, the data are not available, maybe they're not reliable. But I think in the case of last 2 years, this year, and especially this year's budget, the numbers are reasonable. It's very cautious, responsible. For a government that tends to, overclaim and overhype things, it's really remarkable how sensible and responsible the numbers are. And I think for that, the finance minister and her senior officials deserve a lot of credit. By the way, I'm not just saying this because, I know we'll come to the numbers and growth and capex and all of this. But fundamentally, if you think about countries where, processes and institutions have to be good in the long run, I think the fact that last year's and this year, the budgeting process, the numbers are reliable. I mean, things have become transparent, off budget, have come on budget. So I think on that score, I think I would give the budget, on that important score, I'd give that budget very high marks.
Sure. But Dr. Subramanian, tell me, because the other side will always say they could have done more. You're praising them for being cautious and a little guarded. And yes, they have managed to toe the line in terms of the glide path that they've predicted. But given the fact that the economy is still struggling to get back, given the fact that they did have room to spend, could they have done more?
You see, these are all, fine judgment calls, right? I think that, clearly there's no slam dunk here because, look, on the one hand, you're absolutely right that especially because the labor market and the job market are not doing very well, incomes of the poorest have declined, have suffered from the pandemic. So one could argue that I think a little more could be done for that. And I think, and I hope very much that, because remember, the assumption, I think, of the budget is that things will improve. That's the bet. If it doesn't improve, I hope and I think that some of the programs like Manrega, which are demand-driven, higher allocations will be made. And so there is some, hopefully, flexibility and responsiveness to do that. But having said that, I think one also has to keep in mind that there's a big other objective, which has gotten heightened in light of what's happening internationally, right? I'd say two things here. One is that the international environment is getting more difficult in the sense that, inflation is rising around the world. Almost every central bank has either raised interest rates or is going to raise interest rates. And so in that context, if you have a higher deficit and higher borrowing requirements, then I think you're kind of playing with a little bit of fire. I think you need to be a little bit cautious. So that's why I think the glide path, the deficit coming down is, I think, on balance, not an unreasonable call. The second thing I think we all have to remember is that, look, India's debt to GDP, it's kind of 85 to 90% of GDP. It's very high. And I think the number that I think everyone should also focus on is, now interest is about 40% of revenues. I mean, that's very, very high by any cross-country standard. So if your projection is that the economy is going to do reasonably well, then I think it's only when things are going well that you want to consolidate your fiscal positions, because when things are going badly, you need to spend, et cetera, et cetera. So I think it's a judgment call. I think the budget has maybe, hopefully, enough flexibility next year to accommodate some of the things that, if should things turn bad. One is, of course, the labor market, Manrega. The other thing is that if oil prices go up, maybe there may need to be cuts in taxes. So I think that balancing act, I think, has not been unreasonable at all, I think.
Okay, I want to take a moment to also discuss the policy, since we are talking about inflation and the global context and rates. Given that there'll also be increased focus on the RBI in the context of the budget, increased pressure on borrowings, what they might do and whether or not they'll hike rates, perhaps in this particular meet itself. What are you anticipating?
It's always, not right to second guess what the RBI is going to do. But I think that it's clear that if things continue as they are, I think the status quo is not tenable for the RBI. It's just not tenable. I think that you can't have a situation where every central bank is raising interest rates, and quite substantially, especially the major banks, especially the United States. There'll just be too much volatility in foreign exchange markets and capital flows for India not to respond. And here I think the danger is really, and I think one should say it very starkly, the danger is that if you're behind the curve on this, then markets get extra volatile, and then it becomes even more difficult to manage. So I think it's really important for the central bank, for the RBI, is to be a little bit ahead of the curve, anticipate, and don't put. Now, I don't want to be alarmist, because remember that the good news is that India has $30 billion in reserves. That gives India a good cushion. But having said that, that doesn't give you a license not to do anything. Reserves gives you some extra room for maneuver and flexibility, but they're not a license to be completely behind the curve.
So that's just it. The finance secretary actually referred to this budget as a neutral one. And you yourself just said that there are a lot of assumptions built in that things will actually kickstart. Again, a question that's been asked very often is that they've allocated or suggested certain budgetary spending, but will they actually follow through, since they've again assumed that the economy will recover, that growth will be intact, and so forth. What do you feel are the chances? Where do you feel we are in the recovery path?
Look, I think the recovery has been so-so. It's not been, we had a very sharp decline in 2020, which was the highest in the world. I mean, the most severely impacted country in the world. I think people shouldn't forget that. And then we've recovered. So the level of GDP is barely come back to pre-pandemic levels. So it's not, if you look at the index of industrial production, et cetera, we're barely come back. And of course, the composition of that recovery has been quite, skewed. I think it's fair to say that people at the bottom half have suffered more. And, all this talk about the K-shaped recovery, there's some truth to that. So I think, we're not by any means, bouncing back to a fantastic trajectory of growth. So I think we have to be cautious. Yes, there are some bright spots. I think exports are doing well. I think taxes have done well last year. But overall, the economy is still fairly weak. Labor markets especially are very weak. The SME sector is actually quite weak because, remember, it's been hit by a series of shocks. So I think, one should be, fairly modest about where the Indian economy stands today in the aftermath. And remember, the last point I would make is something that I've been emphasizing a lot, that the Indian economy was very weak even going into the pandemic. So it's not as if we had gangbuster, we did very well before, and this is just a kind of temporary aberration, and we're going to bounce back to that. So I think that's why we have to be fairly cautious and fairly watchful and plan accordingly.
I'm going to frame this on a slightly lighter note, Dr. Subramanian, but especially since you talked about the state of the economy pre-pandemic. The socialists are saying the government is not socialist enough. The capitalists are saying they're not capitalist enough. The middleman is really stuck nowhere in the middle. So when you talk about the budget last year and this year progressively getting better, and you can clearly see a plan going forward, what would you like to see more of? Or which direction do you see the financial planning going in?
See, look, I think let's be clear. Budgets, let's be clear about what budgets do and don't do. I think budgets are not the vehicle for a long-term, long-term economic growth. And we're going to come to that. I think where I think the budget has seriously fallen short is in the long run, But then that's not a fault of the budget per se, because we have to, other things have to go right and we're going to come to that. Although I do think the budget has made things worse on the long run economic growth front. So budgets per se are not meant to, they can manage turbulence, they create balance and stability, and they're meant to create the conditions for overall growth to take place. You avoid crisis, you avoid, when things go bad, you want some counter-cyclical buffers, as happened during COVID. So I think we should be clear about, not both expecting too much from budgets, but also that, do budgets create the conditions for other things, the private sector to do well in the economy. So it's from that perspective I feel that the budget has fallen seriously short, and let me explain that. Yeah. I think on the one hand, I think the move to increasing capex, I think is a very welcome step. I think what people should realize is that the capex increase in the budget is partly compensating for capex declines in the rest of the public sector. So to some extent, it's almost offsetting what's the declines elsewhere. And I think, we need to build roads, bridges, all of that. India is still way. But I think long run growth, as I've said repeatedly, including Josh Feldman and I in a recent foreign affairs piece have said, long-run growth is going to come from private investment and exports. Okay. And here, I think the government has to, is maybe going even backwards. The budget, for example, one of the less desirable aspects is, it's raised tariffs once again. Mm-hmm. So basically, the government is doubling down on Atmanirbharta as a long-term growth strategy. I think many of us, including me, have serious doubts about that. And I think in some ways, the tricky part is that India today has a historic opportunity to actually become a leading exporter in the world, because China has become uncompetitive. Investors are fleeing China, and investors now are also rethinking whether they should be in places like Vietnam, because Vietnam is also going through its own challenges. So in a sense, we have this opportunity, and so instead of becoming more open, attracting FDI, especially in critical labor-intensive sectors, we have kind of doubled down on Atmanirbharta, and I think, frankly, that's going backwards. And the budget, to the extent that it's reinforced this protectionism, I feel is not a promising long-run growth strategy.
Okay. Well, a lot of mention was also made about some of the so-called sunrise sectors, whether it be sustainability, green energy, drone technology. Would you call these buzzwords, or again, would you call these long-term indicators?
I think we have to, celebrate the fact that, there are pockets of dynamism in India, whether it's the so-called unicorns, thing. But I think it's very, very important to remember that these are highly capital intensive, finance intensive, highly skill intensive, and highly tech intensive sectors. So in terms of their job creating ability and the ability of the benefits of this to spread to the rest of the economy, I think they're fairly limited. So I don't think, the bottom 50, 70% of the country, you create 100 unicorns. I mean, what does it do to them, for example? Some of them maybe create a few jobs, like in this whole, kind of retail sector and things, but the job creating ability of these sectors is very limited. So I think the key thing, what the crisis has exposed, pandemic, is that we need more growth, and we have a jobs crisis. We need more jobs. And that's why that has to be the long run strategy. And these, unicorns and new energy are not sectors that are going to drive and create a lot of jobs. And I think we should be clear about that.
Okay, so you're saying manufacturing, industry, private sector capex, that's what's expected to kick in and really drive the recovery. That's the expectation, of course, as outlined in the budget itself. But, Dr. Subramanian, if you were to really highlight or probe this a little further, and you've talked about it today, but give us a sense of how deep the problem is. There's been so much said about this K-shaped recovery. While, of course, the finance minister doesn't necessarily want to talk about it in alphabet terms, but the recovery has been much debated. How deep is the problem? Where are we on the path? I'm just going to probe you on this a little bit further, because while on one hand we have seen, as I've mentioned, big industry getting bigger, on the other hand, services are still suffering. Manufacturing, despite the PLI schemes, are still to completely pick up or generate the kind of growth that is being anticipated.
Yeah, I think, see, for me, because the employment data in India are again contested and so on. But for me, I think if you follow the not just unemployment but employment data over the last 2-3 years, I think participation and employment rates have been declining. Of course, you can contest that. But for me, this whole, how much is the demand for Manrega? If you look at the demand for Manrega even today, it's about, at least 50, 60% higher than pre-pandemic levels. And I think that's a kind of a real indicator. For me, the other signal, of course, is that many states, as you know, are imposing kind of jobs for locals only. You wouldn't have this kind of political response if the economy were really, buoyant. If you remember in the 2000s, states wanted people to come in from other states. Migration was very high because there were lots of jobs and, and lots of opportunities. So if you look at the combination of all these things, and then, of course, the SME sector, because, we don't really know for sure what the scars are still in the SME sector, because they've got a lot of forbearance from the banking system. They've got a lot of help, as they should, and maybe they should get a bit more. But we don't know the real state of the SME sector, or we will not for some time until kind of the dust clears. So I think that, it is a recovery that has not been, both the hit and the recovery have still left a lot of people very anxious and not having the kind of livelihoods that maybe they thought they might have before the pandemic hit. And as I said, it's a combination also of the weakness before pandemic hit. So the Indian economy has been weak for some time. So that's why I think we should take all this talk about a relatively weak economy not creating jobs very, very seriously. And we should respond to that.
The last time that, towards the end of 19, we had the announcement of the corporate tax cut, and that was significant. That was something that India Inc. cheered. Post that, we haven't really seen any significant announcement on that front. Is there something that can be tinkered with, or that you feel could come even between budgets over the next year or so?
See, I think on private investment, I think corporate taxes have been cut. They've been fine. I think the real problem in private investment is what we call, is the software of policy making. I think, is there a climate for private investment or not? I think that's the bigger question the government needs to ask itself. If you look at the last several years, apart from a few firms, does the rest of the private sector really feel confident, both domestic, not just foreign, but also domestic private sector? I mean, do they feel confident about, regulation, about level playing fields, about, payments being made on time, about, non-arbitrary decision making? This is what we call the software of economic policy making. That's what's important for private investment. I think the corporate taxes have been done, but it's the broader issue of, regulatory certainty. It's those things that I think have affected private investment deeply. So that's not a matter of the budget. That's not a matter of corporate tax rates which have been done. I mean, the government really seriously needs to think about, what is it about the environment that is still not attracting private investment, both foreign and domestic. And I think that's what I think is the bigger issue for reviving private investment.
All right, that was actually a really good point. Dr. Subramanian, in terms of the divestment agenda, must get your take on that as well. Don't seem to have factored in BPCL. Of course, the Big Bang LIC IPO is expected, and a whole slate of other issues this year. The disinvestment target, again, conservative, achievable. How would you rate it?
See, I think this is one of the things, coming back to the point I made earlier. I mean, in the past, we routinely had absurd targets and we underperformed, right? I think that's why I think the finance ministry deserves a lot of credit by saying, look, you see, I think that the broader, what I find, mature about this and actually politically very savvy is that you under-promise and over-deliver rather than, overhype and consistently don't deliver. I think so in that sense. I think, first of all, let's also give the government credit for Air India. I think it was, been talked about. I think, the government deserves a lot of credit for doing that. If LIC goes through, I think that'll be terrific. I think because, remember, LIC is something that matters. To be honest, Air India, I mean, the point was privatizing Air India is not going to revolutionize the airline industry. The airline industry passed by Air India 25, 30 years ago. Air India privatization was good because it stopped the bleeding, as it were. It was like get this off our hands. It's bleeding. It's not because it's going to, India's airline industry is going to now take off because of Air India. But in the case of LIC, I think LIC is a very important player. And, if we get the privatization, maybe, its profitability, the way it does business, corporate governance, disclosure, all of these things will improve. And I think that's a good sign. And I would, if that happens, it would be very good. And going forward, obviously there are things that need to be done. BPCL you mentioned. I would still hope that one or two public sector banks will be, because again, I want to come back to the point that privatization has two purposes, right? One is to stop the bleeding. You want to do that, and I think that's one purpose, or augment some revenue, either prevent losses or provide some revenue. And the other thing is to actually affect the industry, make it better, operate better. And there, I think the really big players really are in the financial sector. I mean, they matter. In other areas, they matter less and less for the operation of the economy. But in the case of the financial sector, they do matter. And so if you think that privatization is also a tool for efficiency, I think, LIC and the public sector banks would be, I think, for me, important targets for any privatization going forward.
Okay. Dr. Subramanian, on the tax revenue estimates, again, a lot is being said about the fact that they're underestimating the kind of growth. I know you've said that they've taken a conservative approach. Again, in this area, would you say they're being conservative? I ask more from the point of view that, perhaps things can be even better than anticipated. Would you say that even though we're in a weaker position right now, we're ready to bounce back?
I think all the analysts are saying that this year we will overperform. This year, the current year, we're going to overperform on revenues. In which case, of course, the deficit will also come in a bit lower than I think what's in the budget. So I think that's very good. I think for next year, it's you can look at it in two ways. One way to look at it would be to say, why has the government been conservative and has actually paid the price for it? Remember, when it announced the borrowing requirement, bond markets sort of, kind of were a little bit surprised. And G-Sec rates have gone up. The first auction after that was actually partially cancelled by the RBI. So I think, in that sense, the government has been quite brave, as it were, to actually under budget and pay the price for it. So I mean, we don't know better than them, but I think the conservatism is just a way of providing cushion and buffer for, things that can go, possibly wrong. For example, tax revenues may not be as buoyant next year as this year, because remember, this year tax revenues were very buoyant because of the K-shaped recovery. Corporate profits went up and so on. So I think one has to be conservative. And of course, as you know, as you've also mentioned, maybe, Manrega thing will be higher, maybe tax cuts will be necessary. So I think that all those considerations have driven, I think, that conservatism, which I think is very responsible policy, because it has come at a bit of a cost in terms of surprising bond markets. So I think that the government probably on balance has carefully thought about that, and I think they deserve. And if revenues surprise on the upside, I do. So this is one thing I would urge the government, that if revenues surprise on the upside, and on the expenditure things kind of the growth situation is not too bad, that any saving that they make this year, supposing the budget comes in at say 6.5 this year, then I would very much hope that next year's target would also be not 6.5, but 6 or whatever, so that the consolidation continues as a way of reassuring bond markets, as a way of preserving stability at a time when the international environment can get a bit tricky.
Wonderful. Dr. Subramanian, thank you so much for sharing a very cohesive approach and takeaway from the budget, and always a pleasure debating some of these issues with you. Thank you so much for joining us, and at this hour as well. Great to have you with us.
Thanks very much for having me.